Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now in today's video, I want to focus on parallels on bigger time frames. One of the biggest issues retail investors have is that they tend to sell too early, right? So again, the question is, can we use parallels to predict max upside and max downside, or at least as good or keeping yourself in a trade for the longest period of time before you have to pull the parachute, right, and get out of that trade. So I think that's really the key here is using parallels can be a great advantage. I want to teach you how to do that today in this video. And we're going to look at key stocks like Apple, Nvidia, even Alphabet, and we'll even take a look at other charts like gold and the Nasdaq composite. And the idea is, can we predict, are we getting near to some of these levels in the chart? So let's get right into it here, folks. Here's the chart of Apple. This is the daily chart. Now, most people look at this chart and people say, okay, well, it's done its thing. It's kind of rallied up recently. But the question is, how high could Apple go? And listen, let's be 100% transparent. No one really knows. But the key is, can we find a high probability of where it could go before it tops out? And I think that's really what people have to understand, right? If you're an investor here and you're seeing me for the first time, I promise you I'm never right 100% of the time. But by using charts, we can get a high probability forecast where we can be right, let's say 75 or 80% of the time, which in the case of investing and trading makes you very, very profitable and gives you that freedom long-term, financial freedom. So going back to the chart, what I love to do is I love to zoom out. So I zoom out on the daily chart and I start to say, okay, well, Apple's been in a longer term uptrend. Let's even flip it over to the weekly chart. And let's see. All right, so we see Apple's been up long term on the weekly. So what I would do here is I say, okay, what are the major lows on Apple? And this can be somewhat of a trial and error because, again, I'm not expecting everyone, even myself, to pinpoint the exact levels where a parallel is going to form. But as you train your eye, you're going to see this better and better. And so what we do is we grab our parallel tool out and we say, okay, well, if we have a parallel here, and let's go back to this March 2020 low. And notice what I'm doing here, folks. I'm not just picking an arbitrary low to start my lower band of the parallel. What I'm doing is I'm finding a major point in the market history. And so I think we can all agree the COVID low would probably be that major point. And let's start. Let's see what we can get here. So what we do here is if we flip back to the charts, we take that low and we stretch it out to the first low pivot that we see on the charts. And what I'm seeing here right off the bat is that you have this level right here. And really, if we look at that, we know the Liberation Day sell-off was kind of a massive panic. This is what I would do. Now, you might say, well, how do you know to put the line to this low versus this low? And the answer is you don't fully. But what I look for is a line can pierce. But notice how it opened down here, and by the end of this candle, it was well back above the line. You never got a daily close, or in this case, a weekly close below the line. And so what I'm going to do is I'm just going to try that out. Let's just try it out. And what we do is if we take this up, holy cow, look it goes to the bull market high on Apple in 2021, which then coexists with the bull market high of December 2024. Now, what does this do for us? Well, this tells us that if you're an investor or you're a hedge fund long Apple, you can probably have a good probability of riding Apple further higher here to the high end of the parallel. But once you get to that parallel, what do we think the odds are that it's going to just keep going up and up and up? Now, obviously, odds mean that there's no 100%, so there's always a small possibility or probability that it could go higher. But the idea is if it gets up to here, this is where you have to say as an investor, the chart, not my emotion, but the chart is now telling me to pull the ripcord. And this would be around this 277 to 280 level in the next month or two. All right, so it gives us a basis. Now, listen, there's also no guarantees that Apple will get up there. It might get to double top, which it's almost at 260, and stall out. That's very possible as well. And so always have kind of a trailing stop, or you always want to take a little off the table. These type of methods really improve your functionality as a profitable investor or trader. But for me, I'm looking at Apple and I'm saying if it ever gets up to 280, I'm going to actually short it. Because what we can see is the last time it got up to this line, look at the size of the pullback. The last time before that, look at the size of the pullback. I mean, you're seeing these massive drawdowns. For instance, in 2021 to the lows of 2022, 32%, right? And if we take a look at the high here to the low down here, 34%. So Apple's pulling back about 30 to 35% each time that it hits this upper band of the trend line. And vice versa, if Apple ever gets down to this line, what do we want to do? Do we want to buy it? The answer is heck yeah. Now let's flip over to Nvidia. Nvidia is a great one here. So here I'm zoomed out on the daily chart. We can do the same thing and look at the weekly. The weekly is just so vertical. I mean, from the lows here at $13 in 2022 to this level is an incredible rally. But one of the things I see here is very obvious. There's a trend line down here. Look, you can almost see it even without drawing it. And so I take my parallel, and remember, this is trial and error. You never know for sure. But lo and behold, this tells me this is significant. All right, this is basically the beginning. And let me just kind of keep that there. The beginning of the bull market move right here. It checked back, went up, checked back, and then had the huge bull run, checked back, and then had its next bull run. And so what we do here is we say, okay, let's take the parallel up here and let's see what we're finding. Now, what's interesting about this one is that this makes the most sense in terms of a parallel. And so look at this, folks. So we have a high pivot and a high pivot. And then look at how just for one candle we got above and then never confirmed. And again, for those of you that might be watching me for the first time, you're not aware of what the confirmation signal is, but essentially it's confirming a breakout or a breakdown. And if you don't get it, you always want to remain suspect because again, charts can go above and below levels. The confirmation signal, when it triggers, tells you that there's a very high probability that has essentially, it is a real breakout versus a fake out. In this case of Nvidia, it only had one daily green close here, and then the next one was lower, lower, and back in. And then look at this is what tells me this is accurate, is that Nvidia went back up and pulled back, and then this last week in price action, Nvidia was higher, and it got rejected again. Now listen, if it confirms above this line, you got to just accept it and say, okay, game on, right? But right now, this tells me that Nvidia is struggling right here at this 180 level, and it actually could be putting in maybe a down move inside bar for a bear flag pullback. Where would target be? Your previous all-time high around $150 would be your likely first level. Now, if it ever gets back down here, do I buy it? The answer is heck yeah. Look at the moves off of this level here. Incredible. And so again, the beautiful thing about a parallel is it gives you 2 points, right? So anytime we draw a trend line, it's giving us 0.1 to 0.2, and then we get one line. When you have a parallel, you're basing other levels to see if it's accurate by having one line and then another line that has to match up that is also parallel to that first one. And that gives you more credence that you've actually found something significant in the chart, right? All right. Couple other charts here. Let's go to this chart of Alphabet. Alphabet has had a massive move to the upside here, incredible move. And so really what we want to do is kind of the same thing. We have two possibilities. We could do a line from the COVID low to the secondary bear market low in 2022, or we could do a secondary one. Let's do both. Let's first do this one and just see what we get, right? So if we do this one, right, we want to go right to these lows and we bring it up. What we see is, so number one, that one doesn't really matter too much because you pierced it and now you've blown right through it. Now, the one thing that's interesting here is look at this. So this parallel gave us this high, which also gave us the high before the gap up. And that is interesting to me. Now, listen, the reason why that's interesting to me is it might be an opportunity that if it ever comes back there, that would be a buying opportunity. But in the case of predicting a high, this obviously isn't going to do it for me. So, and this is exactly what I want. And I'm showing this on purpose because I want you guys to understand that not every time are you going to draw the perfect parallel, right, where it makes sense. But you have to evaluate it. So let's take this one. What do we have here? Now, if we take this and we say, okay, let's drag this up to this level, does this start to make sense? And this is where it gets really interesting, right? And so what we see is, look at this, low pivot, and here on the Liberation Day panic, remember what I said? How we opened below, but then we got back above. You never had a daily close below, and even on this candle closed back on, and then it hits here and it kisses right here. Now, do you guys understand why this would be something where now I say, holy cow, we now have something that makes sense? And this is, again, technical analysis, first of all, is not perfect. Second of all, it's part of science and part an art form. And you have to be open to that, right? You have to be open to, number one, any line we draw as good as it could be. It could fail, but it's about the probability of that. And so ultimately, when I'm looking at the alphabet chart here, I'm saying, okay, well, if this matches the bear market lows right to the the Liberation Day lows, right, the sell off from Liberation Day, right in April. So number one, major low of a bear market to the Liberation Day major lows. That's important. Then the bull market high matches perfectly with this high right here. Now I have something. Now, what does this tell me? Does it tell me that we could go back and break above? Well, there's always a small possibility of that. But more than likely, if we go back here, it would fall, or maybe it doesn't even get back there and it starts to fall. Where would I buy? If Google, now a lot of people will look at this and say it'll never happen. I've heard that a million times over. And then sometimes in the future, panic, it does happen. But if Google Alphabet ever gets back to like 158, 160, huge buying opportunity. Now it'll have major stops along the way, right? I mean, these other pivot points. But isn't that cool how that works? And lastly, we can just look at the Nasdaq, right? I mean, the Nasdaq's been in this incredible upsloping parallel, right? Or potential parallel. But let's even see. I mean, is there even a parallel here? What about this? Now the question is, do you go here or do we go up here? I think you have to do one here to test it out and then just see. And what we can see is you've actually, look at this. This is actually very interesting because what we can see here is this high was right there, which was the high before the Liberation Day sell-off. So the bull market high of 2021 with the COVID low here. And by the way, I'm on the monthly chart of the Nasdaq Composite. But the COVID low matched to the bear market low of 2020. Look at this. To the high of the bull market in 2021 to the high just before the Liberation Day sell-off. Now we've gone above it, but this tells me this is important. This tells me because of the major highs with the major lows, this is definitely on the more important side. All right, then lastly, what we should do, and I didn't mean to do that, but lastly, what we should do is we should do another parallel, but this time, let's go here. Let's see what happens, okay? Now, this is where things get more important because what we see here, right, we essentially see, look at this. And so to me, the Nasdaq, in all fairness, the Nasdaq, and I'm going to get rid of this other one because I think it complicates it. But this is now, you have the Liberation Day low, the bear market low of 2022, and the bull market high here. And we're basically up there. Now, listen, this does show that we could go a tiny bit higher to about 23,000 on the Nasdaq. You could even make a case if you went exactly to the high here and you don't know if it's going to be the exact high. This would be 23,400. So there's a possibility we do go a little bit higher, but then you have to think, okay, now we're in to a major parallel. So listen, is the Nasdaq potentially done? Well, maybe, but it could go a little bit higher. But this tells me that we get up in this range. Probability is, look, boom, right? Bigger sell-offs off of this parallel. Amazing. It'd be interesting to track this all the way back here. But ultimately, again, I'm using the regular chart. If you do this you can do this with logarithmic charts too. But again, lastly, gold, guys. Gold is just a fun one to look at because it's right at the high end of a parallel here. If we go to the daily chart, I love showing this. Look at this. Low end to low end, and then high, and look at what we just hammered off of on the gold chart. So listen, guys, I know it's a lot to unpack. But my goal is always to give you guys my A game, the most information, the most teaching I can do to help you improve to the point where you guys are just knocking it out of the park, where you're like, oh, who cares about hedge funds? I can outperform hedge funds. And that's the key here. All right. Education is number one. That's what we do at Verified Investing, along with using pure technicals to project out. Parallels are amazing. It's something I didn't use like 15 years ago. But over the last 5 to 10 years, I've used it more and more, and it has helped me immensely pick out major highs and major lows, also helping me stay in trades or get out of trades or even short trades once they hit these levels. You guys have a great rest of your day. Come check us out at verifiedinvesting.com. Thanks again for tuning in. Take care.